$438 billion in 1 quarter. The dealmakers are officially back, Maya.
Or they just learned how to slap AI on every pitch deck. 155% jump? That isn't eased financing. That is panic buying.
Panic buying? Oh, come on. Unilever merging its food business with McCormick for $60 billion is not panic. It's just a really expensive spice rack.
It's a $60 billion distraction. But sure, let's figure out why mayonnaise needs paprika. The rundown. $438 billion in a single quarter. I had to refresh my terminal twice this morning to make sure I wasn't looking at a typo.
155% year-over-year jump. The debt markets finally thawed and everyone is suddenly terrified they're missing the AI boat.
Which is why European buyers are actually outperforming North American acquirers by 6 percentage points right now. They're being incredibly aggressive while US dealmakers are still playing catch-up.
Speaking of playing catch-up, Intel is dropping $14.2 billion to buy back a 49% stake in its Ireland Fab joint venture.
I hate this. I really do. You sell the stake to raise capital when you're desperate, and then you buy it back later? It's dizzying capital allocation. Show me the strategic logic of lighting cash on fire.
Oh, come on, Maya. They're consolidating control over critical European manufacturing just as the entire continent is begging for domestic chip production. It's a premium, sure, but it's a necessary insurance policy.
It's a $14 billion undo button. But fine. What else are you seeing?
Modern Wealth Management just scooped up legacy wealth, a $1.2 billion RIA.
Their 20th acquisition. And they're finally in Florida. Because I think it's physically illegal to run an RIA roll-up without eventually buying a shop in Boca.
Mandatory retirement criteria? Completely unavoidable.
We also have DigitalOcean buying Cat Nemo Labs. The press release literally said it's to accelerate AI capabilities for the, quote, agentic era.
The agentic era?
Yes, I'm adding that to the buzzword penalty jar. It's $50.
I'll pay it. I actually kind of love it. Also, Goldman Sachs officially closed on Innovator Capital Management. The defined outcome ETF pioneer is now firmly inside the mothership. Oh, and Merit Medical grabbed Viewpoint for $140 million to beef up their oncology side.
Smart, clean, bolt-on. But none of these are the real reason my phone has been buzzing since 6 this morning.
No. That would be the whisper that Unilever is trying to build a $60 billion spice rack.
Exactly. Let's talk about McCormick, the big one.
$438 billion.
In one single quarter.
I had to read the printout twice. We haven't seen a first quarter like this in 5 years.
Up 155% year over year. Everyone's screaming about the AI arms race driving the volume. And yes, tech is hot. But look at the debt markets. Financing is finally loosening up, and the dam just broke.
The bankers are actually smiling again. I saw 3 of them at lunch yesterday eating carbs. Nature is healing.
Well, they're definitely eating carbs if this Unilever rumor is true. $60 billion. $60 billion, Nate, to merge a massive chunk of their food business with McCormick.
The ultimate spice rack merger. I love this deal. I really do.
You're blinded by the sheer size of the headline. $60 billion? For what, exactly? Hellmann's mayonnaise and some Old Bay seasoning?
Oh, come on. It's brilliant portfolio management. Unilever has wanted to rotate out of slow-growth food for years so they can focus on health, beauty, and personal care. You merge the food assets with McCormick, you create an absolute grocery store behemoth, and Unilever gets to wash its hands of the center aisle.
I'm not arguing the strategy. The strategy makes sense. I'm arguing the math. McCormick's market cap sits right around $20 billion. So getting to a $60 billion valuation for this combined spin-out means Unilever is valuing its mustard, soup, and ice cream at nearly $40 billion? Show me the growth projections to justify that. You can only raise the price of paprika so many times before consumers just start eating bland chicken.
You're looking at it like a venture capitalist looking for hyper growth. Look at it like a banker. Eased financing conditions mean you can actually lever up a stable, cash-flowing food business right now. Plus, European acquirers are currently outperforming their index by 6 percentage points. They have the equity currency and the absolute arrogance to pull off something massive.
While North American dealmakers are just sitting here playing catch up.
Exactly. Unilever is flexing its European muscle. They spin this out, take a massive special dividend, and use that cash to go buy something high margin in the beauty space.
Okay, wait. If Unilever dumps food to focus entirely on beauty, that makes them an immediate terrifying threat to the pure play cosmetic giants.
Which brings us to the whispers we're hearing out of New York and Barcelona right now. Estee Lauder and Puig.
Advancing talks for a primarily stock-based combination. That's the rumor.
It makes perfect sense defensively. If Unilever is clearing the decks to hunt for beauty brands, Estee Lauder needs to get bigger fast to protect its turf.
I need to see the exchange ratio on that Puig deal before I buy the narrative. Stock deals in a market this volatile are notoriously fragile.
We'll keep tracking the makeup drama, but we need to talk about what Intel is doing in Ireland because buying back a joint venture stake for $14.2 billion is a massive flex.
I have the SEC filing right here, and the structure is fascinating. Voices.
So the consensus note floating around this morning claims the massive Q1 surge, up 155% year over year, is driven equally by eased financing conditions and the AI arms race.
I read that note. I buy the AI arms race part. Look at DigitalOcean scooping up Cat Nemo Labs just to stay relevant in the quote-unquote agentic era. But eased financing? Come on.
You don't think debt is getting cheaper? The pipeline is unclogging, Maya. Bankers are actually smiling again.
Bankers smile when they get their bonuses, Nate. The financing isn't actually that cheap. Buyers are just getting used to the new normal. They got tired of waiting.
Fair, but you need serious capital fluidity to see a $438 billion quarter. I mean, Intel is buying back a 49% stake in its Ireland Fab joint venture. That is $14.2 billion just moving across the board.
Right. But look who is actually winning. The second half of that analyst note is the part that actually surprised me. European acquirers are outperforming their index by 6 percentage points. North America is literally playing catch-up.
Wait, really? Europe is leading? I thought they all took the entire first quarter off to go skiing in the Alps.
Your banker bias is showing.
I own it. But 6% outperformance is huge. What are they buying?
Well, the whispers I am hearing out of the beauty sector might explain some of it. Word is Puig and Estee Lauder are advancing talks for a massive stock-based combination.
Oh, that would be wild. But if we are talking European giants making moves, we have to talk about the $60 billion elephant in the room.
You mean the Spice Rack merger?
Exactly, Unilever and McCormick. If that unconfirmed blockbuster actually happens, it rewrites the entire consumer goods playbook. Let me pull up the historical multiples on this. Spill the tea. I am telling you, the European beauty houses are treating this market like an episode of Succession. The whispers about Estee Lauder and Puig are getting incredibly loud.
Loud, sure, but primarily stock-based? I read that and immediately thought someone is trying to hide a valuation gap.
Oh, come on, a stock swap here is elegant. You have legacy families, massive premium brand portfolios. It keeps everyone invested in the upside instead of just cashing out.
Elegant is banker speak for we could not agree on a cash price. Puig just went public last year. Estee Lauder's stock has been on a brutal roller coaster. Trying to peg a fair exchange ratio right now sounds like an absolute nightmare. I would demand to see the earnout structure before I believe a word of it.
You are so cynical.
I read the footnotes, Nate. It keeps me grounded.
Fair, but the strategic fit is too good to ignore. And speaking of strategic fits that sound like a nightmare to integrate, we have to talk about the $60 billion elephant in the grocery aisle.
The Unilever and McCormick rumor.
$60 billion. They want to merge a huge chunk of Unilever's food business with McCormick. I am just picturing a boardroom trying to synergize Hellmann's mayonnaise with Old Bay seasoning.
Which sounds physically repulsive, by the way.
It is a Maryland delicacy, Maya. Have some respect for the spice rack.
I will pass on the mayo, But look at the sheer scale of this thing. 60 billion is not a bolt-on acquisition. That is a market-defining swing. If this actually prints, it completely validates what we saw in the macro data.
Exactly. The financing conditions finally eased up and suddenly everyone wants to do a mega merger again.
Which is the perfect segue, because I finally dug through the final Q1 numbers. $438 billion in total deal value, the highest we have seen in 5 years.
And I want to talk about exactly who is driving that massive surge because, spoiler alert, North American buyers are actually getting beaten at their own game. Tomorrow's radar. So tomorrow morning, I am hitting refresh on the SEC feed at 6 a.m. for the Apollo filings on Gatehouse Living.
You desperately need a hobby, but keep an eye on Gilead too. The clock finally runs out tomorrow on their extended tender offer for RSLX.
Right, though honestly, the real radar item is the whisper out of the beauty sector. Estee Lauder and Puig are supposedly advancing talks for a massive stock-based combination.
A mostly stock deal. Oh, come on. Estee's stock is way too volatile to use as currency right now. Show me the exchange ratio before you sell me on this narrative.
It makes perfect strategic sense. European acquirers are crushing it right now, outperforming their index by 6 points. Puig has the leverage to demand a premium.
Strategic sense and a clean cap table are two totally different things, Nate.
Spoken like a true skeptic. Either way, between that rumor and the $60 billion Unilever whisper, Q2 is clearly trying to beat Q1's massive $438 billion record.
And we will be here to read the footnotes when they try. Catch you tomorrow.